there's a 2010 analysis by the Citizens for Tax Justice. Corporate taxpayers and corporate tax dodgers. In the calendar year 2010, manufacturers paid 23.2% of their profits in taxes, compared with 2.2% for IT companies and 5.2% for telecom companies. On average, the tax rate for the companies in their study was 17.5%. Anyone on the panel familiar with this data, and give me your assessment of those differentials?
Sure. I mean, I can jump in. I mean, Citizens for Tax Justice and ITEP have been doing this kind of analysis for basically 30 years, and actually one of their reports was one of the impetuses behind the 1986 Tax Reform Act, when President Reagan read it and saw the number of companies that weren't paying, profitable companies that weren't paying federal income taxes, and said we have to do something about this. So it's an analysis of only profitable companies. They screen out the ones that are not profitable, and it looks at at their overall effective rate. And I think you had mentioned those. That it was very interesting, the disparities among industries, and in particular the manufacturing being a 23% rate. I think another thing that is masked in the way they do it is that there's also a differential between domestic manufacturing and foreign manufacturing, which I think is another distortion created by the tax code, and an important one that we have to address. So I think overall, as you mentioned,
say that you're talking the manufacturing being adversely impacted,
right? In the domestic manufacturing, right? And so, I mean, I think the study on the whole sort of undermines the notion that corporations are overtaxed in general, compared to other countries, and certainly, would lead to the conclusion that we need a base broadening that levels the playing field among competing industries.